Nobody seems to be noticing what is currently happening to natural gas, as those indicators right here signaled the last few tops that we've seen, and they are currently firing again. In today's video, we are going to have a look at the most important technicals, fundamentals, and also macroeconomics to understand the latest price action that we've seen happening here to natural gas, as we've topped out here in the early beginnings of February, and we've seen that massive sell-off following. We are currently in this range between this support and this resistance, and we're currently starting to consolidate and maybe even reverse from here. We might see that this upper resistance will actually be retested with a continuation of this bearish pressure actually regaining strength again. But whether this is actually about to appear, whether this is about to happen next to natural gas, we obviously have to take a look at the fundamentals and macroeconomics to understand the long-term trends of this commodity. Let's first have a look at this article by the International Energy Agency, because it concludes that we have seen that global LNG supply has actually accelerated further here in 2026 to more than 7%. And that obviously would suggest we might see some downward pressure actually regaining some strength, as we have seen that the production and consumption is moving to a bearish balance. We have seen here for 2025 that consumption, measured here in billion cubic meters, has actually been at roughly 4,268 billion cubic meters. And production, on the other hand, has been lower at 4,246. And that obviously shows you we had more consumption than production. We had actually more demand than supply. That is quite bullish. But this is actually changing now or at least the International Energy Agency says that, because we are having a projection for 2026 which is showing bearish signs. We have seen that obviously grow here. We have seen demand, or in other words consumption, actually grow to 4,371, or this is actually projected, and we're actually seeing that now turning around, as we do see production actually exceeding consumption. And that obviously is a bearish factor, but we do believe at Kronos that this is not the only and not even the primary driver that is about to decide whether we're about to see a rising or a falling natural gas price in the coming months, because we have to take a look at the broader historical cycles that are ultimately driving this commodity. You do see those cycles here at natural gas, and they always start and they always end with specific indicators actually showing specific signs. What you're seeing here on the screen is the gold to oil ratio. You're seeing the gold to silver ratio, and you're also seeing the copper to gold ratio. Those are really important ratios between certain commodities to actually understand the sentiment and also understand the cycles, because we are moving in cycles, as we've just explained. And the last few reversals, those last few tops that we've seen, actually always played out quite similarly. We have, for example, seen that rise here previous to the great financial crisis in 2007-2008. We have seen that bullish trend at natural gas actually coinciding to that bearish trend here at the copper to gold ratio. We have seen that divergence, which is actually repeating itself here in history. And we are actually currently seeing exactly the same thing happening. You have seen that big bullish trend in the last few years here at natural gas, and you have seen that bearish trend at the copper to gold ratio, which just does mean that we have seen gold outperforming copper. And that actually also coincided to this time previous to the great financial crisis. We have also seen that happening here in 2007 and 2008, which ultimately obviously led to this crash that we've seen following. And that really shows you that it is really important to understand those historical cycles. And if you don't want to miss them in the future videos, please make sure to subscribe to our channel and like the video so you don't miss those future indicators and really understand those cycles a lot more, because those are obviously the main drivers. And just make sure to subscribe to our channel and like the videos to support us. We are really grateful for you doing that. Thanks for your support. Now let's have a look at the other indicators here. You obviously do see the gold to silver ratio also indicating those cycles. You have seen that reversal from this weakening to this strengthening gold to silver ratio. Obviously, you do see gold outperform silver in those crashes. But keep in mind that does not mean gold is actually rising. We have seen gold decline at this point, but obviously it declined slower or less significant than silver. We have seen gold outperform silver in those downturns. And whenever you do see that spiking up, you do have a recession warning generally. And in fact, we are currently seeing quite similar things. We could obviously see this actually be a consolidation, but at the end of the day, this will obviously lead to a continuous trend upwards here at the gold to silver ratio. And in fact, we do also see quite similar things happening to the gold to oil ratio. In the last few cycles, we have seen that gold has not only outperformed against silver, we've also seen that gold actually outperformed against oil. Obviously, we do have those industrial components, we do have those industrial materials like silver, like copper, and also like oil, which obviously do weaken against gold in those crashes, since gold is obviously this flight to safety asset. And whenever you do see those actually spike up, as we've seen several times here, for example, also in 2011, also here in 2015, and also previous to the Corona crash, whenever you do see that actually happening, those are massive signals for underlying weakness, or at least that the cycle might head to the end of the cycle. We do see that those indications actually always show you that the end of the cycle is coming nearer. And we're currently seeing that bullish trend change here at the gold to silver ratio. We have seen that divergence at the copper to gold ratio and the natural gas price. We have also seen that gold actually outperformed oil. And we have also seen that overall sentiment actually being quite similar to what we've seen happening before previous crashes. Now, obviously, that would suggest we do see history repeat. That would suggest we do see a reversal happening, a structural downward trend starting here at natural gas. We would see a continuation of what we're currently seeing, ultimately leading to a crash or a cyclical downturn, as we've seen it happen, for example, here after the great financial crisis. But at the same time, you obviously have to keep in mind that that was also fueled by the dollar weakening. And in fact, when you have now seen that crash, actually the dollar strengthened. It's always important to keep in mind that you're measuring natural gas not against a constant, but actually against something that can be manipulated. You're measuring natural gas against the dollar, which obviously strengthens and weakens as well. And so you do see that in those bull markets that we've seen here at natural gas, the dollar tends to weaken. And when we are seeing those crashes, we tend to see deflationary spikes. We do tend to see that the dollar is actually spiking to the upside. We do see it strengthen, obviously, because of this deflationary nature. The credit is actually contracting, the money supply is contracting. And so what we're currently seeing happening here to natural gas is obviously quite difficult to predict. This could obviously be the beginning of what we've seen happening here after this crash actually began. We could see this actually be the beginning of this massive downturn, as we've seen it happen in previous cycles. But this could also obviously be just the beginning of a smaller corrective movement here at natural gas. We could see this actually end in a deeper continuation, in a continuation of this bull market. We could see eventually that this actually is just a smaller corrective movement. We might see this actually lead to higher prices, as we do still see the dollar actually weaken. But at the same time, we do believe that this channel is indicating the upside potential that we do have left. We do not believe in massive structural upward trends besides this channel. We do believe that the upside potential is in fact limited at this point, and even if we do see this to continue for a while, um, it is obviously like playing with fire. We do have to see this deflationary crash soon. Um, this obviously means we can see this to continue here. Actually, a rally to the upside could continue, but we could also just see that being the beginning of this deflationary credit contraction that we've seen so many times here in history. And so in the short term, obviously it seems quite likely we do see a retest of the upper resistance here. And then we might just see this lower support of this upwards channel, of this parallel channel here in yellow. We might see a retest of that. And that might be the time we do see the decision being made whether this is just a smaller corrective movement here in this overall upward trend, or whether this is just the beginning of a massive downward trend here at natural gas to the downside. We're going to update you on that in the future videos. We are doing daily updates here on natural gas, and so if you don't want to miss them, please make sure to subscribe to our channel and like the video so you don't miss those videos, and also support us for our work here on YouTube. We do also have a Discord channel where we do also share latest information, which you can also join by just clicking the link down in the description. Thanks for your support. See you the next time. Bye bye.